Morning, everybody. How's it going? You guys can handle one more before a real break? Hopefully. So I'm psyched to be here, and it's exciting. It's been a while since I've been here, and thanks to the whole Luma team for inviting me to host this panel. It's exciting to be here and celebrate a bunch of these amazing companies. As Brian said, my name is Doug Pepper. I actually work for a group called Iconic Growth, which is the venture arm within Iconic Capital. Iconic Capital is actually a wealth management firm that manages the family capital of many of the world's most important founders. And then the group that I'm within helps to manage their venture investments and really pool that capital together to help them back really the next generation of amazing companies like the ones that we have here. We invest in software, typically Series B and beyond. And we're investing our sixth fund, which is about a $4 billion fund. As Brian alluded to, I've spent the bulk of my 22-year venture career investing in the customer experience software space with a heavy emphasis on MarTech. He mentioned a bunch of the companies that I've been involved with, and it's been a really fun category to be a part of. As we'll talk about, not every investor loves to invest in this category. I do. I think that it's going to continue to be important over many years. So very excited about this panel of esteemed panelists who have built incredible companies in the MarTech space. I think we can all agree that building a unicorn in and of itself is really hard. I think it's even harder in the MarTech space. So we're going to talk about the challenges that they faced, how they overcame a lot of those challenges, and really what they see as operators in terms of how this category has evolved and where it's headed from here. And honestly, these guys are the perfect people to talk through that. They all founded their companies about a decade ago. All of their companies are approaching or above 100 million ARR. They've all raised money at unicorn valuations or higher, but they cover very different aspects and parts of the MarTech stack, which I think is interesting. So we'll get started with introductions. Obviously, you got John here, CEO and founder of Sendbird, Kaz from Treasure Data, and Fayez from Bluecore. And I think what we'll do is just start with them each spending a minute giving a longer introduction on themselves as well as their companies. So John, do you want to kick it off?
Sounds good. Excited to be here. I'm John, founder and CEO of Sendbird. I began my career as actually a software engineer, and then I also started my first company, which was a social gaming company. So ran that for about 4.5 years on Facebook. We're one of those guys who probably spam you on Facebook, invite your friends to kill other friends and pay us money to do it. Did that and got to about 5 million users, and we eventually got acquired by a company in Japan. And then I started December with the buddies from my first startup. So about 10 years ago, again, started as a consumer business. Then we actually pivoted to what became Sendbird around mid-2015. So we've been in this business about 6 years. And then what we do is that we are a conversations platform for mobile applications. So we power the conversations on your mobile app, but also on the websites. So we power about 250 million users on a monthly basis. We power apps like DoorDash, PayPal, et cetera, where there's a conversation that's needed. So we power use cases like marketing, customer support, as well as user-to-user communications in communication settings. We have collectively raised over $200 million in total funding, and then we partnered with Doug since our Series A, so since late 2017. We have about 300 people across the globe in 6 different countries, serving customers really from all over the world. So yeah, that's a little bit about me.
Okay, my name is Kaz. I started this company 12 years ago as a CTO, Chief Technology Officer, and became a CEO June 1st last year. We're the enterprise CDP, customer data platform company. I think this number illustrates us really well, but our average customer size is around 300K right now, annually. And the new deals is more like 500,000 right now. So we're definitely targeting only towards global brands who have multiple businesses, need to implement CDP across multiple continents. As a result, we have 450 plus customers, and right now we serve around 2 to 3 billion profiles of data on the Earth. So if you think about how many humans on the Earth, there are 8 billion. 4.5 are internet connected. So our company actually serves more than 40 to 50% of internet population, which is like really exciting for me every day, right? And for me as an entrepreneur, I majored in computer science. My professor has built the world's fastest supercomputer, and I was a part of the team to build the file system for that supercomputer. So that gave me an opportunity to handle large amount of data. And I was 25 when I started the company. I couldn't speak any English, nothing to lose, come from Japan. And we were just 3 people in one room, and scaled to 700 people now, so a lot of journey.
Hey everybody, I'm Faiz, and I'm glad, Doug, this is not titled Last Year's Unicorns. But excited to
talk about that.
Yeah. Excited to be here. I'm the co-founder and CEO of Bluecore. We're verticalized software, so we focus on serving the world's leading, most customer-centric retailers, typically the ones that have been brick and mortar that are transitioning into a digital world. So think the Gaps, the Nikes of the world that are going direct to consumer. And what we are is, there's been a lot of talk about customer data, but when you think about retail, the other big asset they have is the product data they have, the product catalog, all the attributes around it, inventory that moves in and out. We bring all of that together inside Bluecore, combine it with customer data, and that becomes the foundation upon which you can drive really powerful personalized communications. Based in New York, although I don't know where most of our employees are today, we serve about 400 brands, but most of our relationships are with large enterprises, so they're meaningful strategic relationships in the vertical we operate.
That's great. We don't have that much time, so we will jump right in, and hopefully you guys will disagree with each other and make this interesting. But starting with a contrarian viewpoint, especially for people in this room, the public markets in particular always apply a pretty big discount to MarTech companies, and I think that's the case in private as well. I love it, but a lot of investors are not as focused on MarTech. Why do you guys think that is as operators? And what have you done to kind of, to overcome that and build successful businesses despite, some of that perception? You want to start at the end there?
Yeah, I remember when we were raising our first round, we got some advice, and they said, hey, if you're raising money, go raise from investors who know a lot about MarTech and really know the space, or know nothing about MarTech. The ones who know a little bit, which there's a lot of, is typically the hardest conversation because, like you said, there's a lot of negative perception about it. I think 2 reasons. One is there has been a perception since 2013, before the marketing clouds were formed, that every problem that could have been solved was solved, and what could a set of new companies we be doing. That turned out to be false. And then the second thing, I think a lot of folks underestimated how technically complex it was to build some of these products that had a fundamentally different architecture when it came to managing data, running some of these machine learning models, and showing true incrementality out of it, right? Some of our customers generate over 200 million in incremental revenue from using Bluecore. That's meaningful, and I think a lot of folks underestimated that.
I think for me, just the category is too busy, right? There are 10,000 companies, the chaos map, like who knows who is different, right? That, really impacts the overall valuation and multiple. And the, other way to look at it is, I think, we focus on customer, but at the same time, if you look at advertisement, MarTech, the budget is heavily influenced by the economy too. Right, I think those 2 are the reasons for me.
Yeah, and maybe switching gears a little bit for John and Kaz, I think it's important to point out that you guys didn't start in MarTech, that you evolved there. I think you did, of course, with Bluecore. But John, talk a little bit about that, like the evolution from where you started and deciding and being pulled into MarTech.
Yeah, so given our background as a consumer founders, we actually started out focusing on the social use cases, providing communication capability for user-to-user communication on apps like Reddit and Yahoo Fantasy Sports and a lot of gaming companies out there. But what ended up happening over the years is that we start to see our customer bending our APIs to really power the marketing use cases. We call it the announcements. Would it be sending targeted marketing campaigns to much larger group of users on the applications? So we initially said, like, no, that's not what our APIs are for, but we ended up accepting our fate that more of our customers wanted to use us for marketing. So we started engaging more with the marketing buyers, the CMOs, and the marketers who wanted to really use us. So we started coming from this product, selling to product managers and engineers, now being pulled into the marketing use cases, still being, I guess, a champion by the product managers, but on the back end, we're now talking a lot more with the marketing buyers. And it has been a very organic journey. And our view from coming from this developer tool, API-driven business into MarTech has given us a little bit of insight into what's good and bad and different about the buyer persona and the buyer-centered traits of marketing. The marketing buyers tend to be a lot more, I guess, open to innovation and testing out new products. The budget's pretty much larger, but also it comes and goes. There's a lot more fluctuation in the budget based on the economy and the state of the market. So we're seeing some good and bad and different about the differences there.
And same for you, right, Cass?
So for me, we started as a data company. Our tagline in 2010 or 11 was actually cloud data warehouse. And then as you know, like Amazon, Google, Microsoft, everyone comes in and our churn rate becomes really high, customer size is shrinking. I thought we're gonna bankrupt, right? But I still remember, one of our investors was Jerry Yang, the founder of Yahoo. And he gave me this advice around like 30 minutes. Hey, Cass, you're gonna have to raise like $1 billion to fight against those guys, or build the application on top of it so that you build more value. And then for you as an entrepreneur, you don't have any successful career in the Valley, so you can't really raise $1 billion. So the only way to survive is build more application on top of it. So go figure it out. So we actually found out majority of our customers using our platform to analyze customer data. So we focus on that use case, build some application about segmentation, activation, journey orchestration, identification. We didn't know what to call it, but this little category called CDP emerged, and then we decided to go with it. Yeah.
It's impressive, amazing strategic decision making. Fayez, you've been in this category since the beginning. 10 years, 2013?
Next year, 10 years.
Yeah, next year, 10 years. How have you seen this MarTech category evolve over that time in terms of the persona, their power in the organization, budgets, what they're looking for? Talk a little bit about the evolution you've seen.
Yeah, so I can speak for the market we're in. Just some overall stats. When we started in 2013, I remember we had this slide that said e-commerce is $1 trillion global market. And we don't put slides like that anymore. But today it's a $10 trillion global market. I think the US alone is $1 trillion. So this idea that, hey, you can build verticalized software for a market that big is absolutely true. The other things that were true then was for a lot of the large retailers, store was and is still a big portion of their revenues. So e-commerce was the stepchild that was off in the corner, and Bluecore and a bunch of other tools were nice to haves that they all bought and operated in the corner, right? Today you look, all of those buyers are chief digital officers, chief customer officers. You have stores that are reporting into some of these folks that were born and raised in a digital world. What is e-commerce? If you buy online and pick up in store, is that e-commerce or not? If you order in store and get it at home, it doesn't matter, right? So the entry point is digital. So the change that we're most excited about as it relates to this market is that a lot of the digital owners in 10 years have grown their careers and they hold the budgets. And the industry the market is still growing.
It's really powerful. I don't know if Rob's still here. Is he still here? That's good that he's not. I've sort of made a business of disrupting the prior generation. Braze is, I think, disrupting Responsis, and Marketo did the same thing to Eloqua after it was acquired. To what extent do you guys feel like you're also looking back at a prior generation of companies in your category that you need to now go disrupt through better architecture, better technology? Is that part of how you're thinking about what you're doing, John or Cass?
Yeah. So I think the way we kind of think about where the business is trending is if you think about the marketing experience that you're experiencing today on applications or mobile web, is that you get this unidirectional marketing messages, whether it be pop-up modal dialogue or some kind of push notification. You try to interact with it. There isn't a lot you can do. So they'll probably give you like 6-digit code that you can enter during the checkout process to get extra 15% discount. But what the world we're envisioning with our customers is that the marketing will become a lot more interactive. The campaigns will become more humanized and personalized, and it's all based on the relationship with the customer. Because if you think about the marketing today, a lot of the marketing campaigns are designed by demographics, and the marketers tend to put in a couple of conditions to segment their customers and send this like unidirectional marketing campaign that's going to drip campaign them for the next 6 touch points and stuff like that. But the way we think, or how our customers are building marketing on top of our stack, is because we're a conversational stack. We know the relationship with the customer, the conversation they have with the brand, whether it be through their support channels or through their sales channels, or even with other users on their platforms. So by leveraging those conversational data, the marketing become a lot more personalized. And then also we can add interactive capabilities, just like if you imagine, maybe a decade ago when Facebook first introduced features like, reactions, hitting likes or dislikes on the posts. You can actually do that with other marketing campaigns that are being sent on your mobile applications as well. So we're kind of envisioning this world where marketing becomes a lot more personalized and interactive through working with a tech stack like ours. And we believe that's kind of future of where the marketing's headed.
And Kaz, obviously you've got Snowflake out there and some others that are thinking about your space, but are you also disrupting other prior generations?
In every deal we have Salesforce or Adobe or both.
Yeah.
Given our buyer, right? And it's amazing that our product has 80 to 85% of RFP win ratio right now in US, although the deal win rate is around 30%. So what happens was we win by product, but they have all these connections with executives, so they just bundle CDP in one of the suite. So that's the battle we need to go on the go-to-market side. But on the product side, we're actually deploying 500 to 600 changes every month. And we don't deploy any weekend on Friday just to make sure. But we're making probably 30 deployments every day. And if you are using Salesforce, they always have downtime every week, right? So the only way we can survive is how can we make sure we're most customer-centric in the category, and then we have the fastest delivery and quality, and then we just keep innovating, right? So that's just the source of differentiation. And for me, as a product and engineering focused founder, that comes, with a lot of expertise, right?
Yeah.
Yep.
It brings up a point that was on my mind when I was looking at all of your respective backgrounds. Really unique. A lot of people think that MarTech companies just aren't tech first, that it's more about the application layer, workflow, and obviously we've already talked here about the importance of data and technology. You guys are all product founders, technology founders. If I ask, how do you now as CEO, you have a lot of other things to worry about, besides that, continue to focus on innovation, velocity as CEO, given that's your background?
Yeah, I think the latest request was about lunch in the office, even though most people don't show up in the office. So besides that, I think the most important thing for me to do is get a sense of where the market is, right? So I think even though I love to sit down with the product teams and be part of their sprint cycles, what they're looking for is an accurate synthesis of where the market is and what customers want, right? Again, we have hundreds of customers. We won't be a company that needs tens of thousands of customers to succeed. So thinking about how do we run customer advisory boards so that we can show that a good portion of our product roadmap has been influenced by the right kind of ideal customer. That's one where I spend a lot of time. I think the remote world has made it easier to bring customers into the loop, right? So we have customers join our bi-weekly town halls and talk about their experience using the product so that the 400 employees at Bluecore can get a sense of how they can do better with that, right? So I think I've started to think about how my background can be an accelerant for the team versus being in the middle of the loop, although sometimes I tend to do that unproductively.
Now, John, as a board member of Sember, I know you guys have been doing a lot of product innovation these days. I don't know if you want to talk about how you were involved in some of the more recent efforts there.
Yeah.
I love the anecdote, but I don't know if you want to share it. But
So we went through a program called Y Combinator back in 2016, and some of the things that we learned was the value of having intense focus period with a small set of groups of people. So we are currently in the process of going through our own business transformation, really rebuilding our entire business value around, again, like marketing and support use cases. And what we did was we basically rented out like an Airbnb, put all of our product and like engine designer guys there. We lived and worked together for an entire month together. I went there to live with them and work with them for 2 weeks. And then, yeah, it was like a rapid way to innovate and do prototyping and talk to a bunch of customers, just like our days in YC. And what's interesting was I was talking to Paul Graham, the founder of YC, the other day, and he had mentioned that a lot of successful YC companies at scale actually incorporate their YC-like program within their own companies. Like Stripe has their own YC version, Airbnb also does something very, very similar. So we have this intense period where this team is solely responsible, not just for prototyping, but actually talking to customers and getting the first customer to buy the product, so they own the entire end-to-end journey. So it's almost like having a small startup within your startup, but not just for product, but actually the entire go-to-market. So you're quickly iterating the product value with the customers and validating the market need rapidly. And that comes back to like the original question, how do we maintain the velocity and focus as a founder CEO, is that as the company scale, a lot of executives tend to kind of shy away from talking to customers directly, maybe except for the head of sales. But we encourage all of our leaders to actually go talk to customers as many times as possible. And that really sharpens the focus of the entire executive team, but also increasing the overall product velocity as a result. So that's kind of what we did.
By the way, I just noticed my name on there. Doug Knopper. I like it, it's just not my name. Let's switch gears in the time we have left to the here and now today, like what's really going on. And we talked about ad budgets and MarTech budgets being early in terms of people cutting, and everybody's cutting today. Anecdotes, what are you guys seeing on the ground today? Demand patterns, buying patterns?
Yeah, I can start. To be honest, if I look at the pipeline we're building, it's amazing. So US is growing. We are seeing tough challenges in Europe market, to be honest. So definitely there are some economic, geopolitics, and FX challenges there, right? One thing I noticed is when I met probably 50 customers at the CAB, Customer Advisory Board, 2 weeks ago, majority of them are cutting the budget because it's enterprise. Yeah. But at the same time, based on the CMO survey came out in September, they are doubling the investment to data and analytics over time in next 3 years. So what is happening is the marketing budget is shrinking, but at the same time, the percentage of budget they're spending for the technology and data analytics is actually doubling. So overall, our TAM is expanding. That's how we view it right now.
Okay.
Yeah, I think there's definitely a lot of panic on the ground when you look at the customer base. Just an anecdote, we closed our third quarter 3 weeks ago, and in the last week of the quarter, we had a $1.5 million deal that was all forecasted. In a period of a week, that went from 1.5 to 0 to 1.3. But that's because our team was able to draw the line between not just ROI, but also cost savings. So I think it requires while marketing budgets are getting slashed, owned budgets are holding pretty steady from what we see. But I think at the most senior levels, and for the finance teams that look at things from an aggregate point of view, having analytics and having the buy-in from the budget holders and being able to quantify that is extremely important, right? So it's not just about ROI, which I think MarTech companies are generally good at showing. It's about showing the bottom line as well.
Final question, sort of the 800-pound gorilla, given this panel is titled MarTech Unicorns. A lot of unicorns aren't unicorns anymore. Things have changed. I'm sitting on the board of Braze, which is, I think, trading at 5 times right now. How are you guys thinking about that as executives that successfully raised money in the last 2 years at very high valuations where it may take time to grow into those valuations? Thoughts as an executive in that situation?
Yeah, I think you mentioned that it's been about 10 years since we started the company, and we'll be probably working on this for the next 10 years. So I think we have this long-term view of market comes and goes, but as long as you're fundamentally creating value for your customers, the market valuation will come back up to a certain point, and then we'll just have to keep focusing on building value for the market and the customers.
I think echo with John, this is probably third time within since we started having market correction, right? Also, we store 2 to 3 billion people's data. Facebook owns 3 billion people's data. So if you think about revenue per profile, there are 1,000 times more. So if you can, 10x, that's $1 billion ARR, right? So that's which excites me the most every day. So long-term thinking.
It's a great target to have
Yeah.
in mind. Any other thoughts?
Yeah, I think the one thing that I think these times help is from a product market fit and clarity perspective, I think these times are useful. I remember in the early days, we refused to sign long-term contracts with our customers because we felt like it would mask churn. So really pushing your teams, especially as a multi-product company, to really figure out what are the fundamentals of your gross retention, your net dollar retention. And I think from a practical perspective, I think private companies don't have to prove that we can generate cash flow today, but can we prove very accurately that we can generate cash flow tomorrow? For us, that's for every dollar you put in sales and marketing, how effectively can you generate a dollar out? Net dollar retention, and gross margins. I think MarTech companies, because of how much first-party data we process, are fundamentally disadvantaged than some other categories. So that's a good, challenging exercise for engineering teams in terms of how do you innovate, not just in terms of new capabilities, but how do you drive revenue at a lower compute cost, right? Which is exciting to a different class of folks. So we're really retraining the team to think that way.
Good. Great thoughts to end on. Thanks to all of you. Congrats on what you have built and are building. Good luck in the future.
Thank you.
Thanks, everybody.